Okay, so we'd also be only interested in the reversal of the 4-hour chart, if that is there. This is the 4-hour chart, of course. We're seeing an ascending triangle. The market apparently did an A and a B, and that B actually did an A, B, and a C. Alright, now there's that dashed white line again, just like with Bitcoin. But this is going to be a breakout. You don't want to fall below this line. This line comes in at something like 60 cents. Alright, even a bit lower, 58, and we're showing it 58. So this should have an Elliott structure. The confirmation that we move 58 cents is a buy, solid buy, of course, because the number is not that strong. Because there is now probably dollar strength in the market. We take a look very shortly. That B could be finished, but very lengthy B before we go high degree C. We want to trade into high degree C, takes you to 70 cents and $1, 76 cents actually, and then $1. We have this showing on the daily chart. Until then, we would expect that therefore you could get levels that are lower below that degree 1, but over here it looks like $58 cents is a buy with a stop just below the market bottom. Now the market bottom is more identifiable here. So this level here, 58 and 57, is a very strong level to bounce at because it's a very tight level 1. This is where it bounces. So whatever we're buying, we could just buy as close to 58 as possible, but we're showing at 57.96 if the reversal confirms. And we just have a stop at 40 cents. Let's take a look at targets now. Of course, the first target is going to be at the neckline and the shoulder level. This is the head. There's going to be shoulder level here. That S, that head. Any cycle that has broken lower will test the resistance of the last cycle bottom. So you have to test the shoulder. So you're looking at 80 cents, but in more reality, you're looking at the weekly chart. So we know we are in a very strong leading diagonal, like what has happened in degree A. Degree C is doing the same leading diagonal, but supporting on top of some cycle bottom in degree A here. So if there's a bounce, that degree C is shown here in big yellow letters already, an A and a B and an A, B, C. That is the bounce in C. Right now at 57 or 58 cents. Takes you to the top of that leading diagonal, $1.10. But again, it all depends on the fundamentals. If the fundamentals are strong, if the fundamentals are not strong, then there's no base for the trade. There's really no potential for the trade, and we just had, maybe it would be a false alarm. Maybe the market will disregard the numbers, and there's going to be an intermediate term reversal in cryptos. We have to be prepared, like we always keep saying. But again, if the fundamentals are not dollar weak, then the trade is unfounded, and we would consider to actually enter at the very best levels we see, or simply delay it till next week. Alright, so let's observe this chart. This is a 15-minute chart. We don't really have the label, but everyone can see what we're looking at. This is our internal degree 1. At that point, that red price line actually. There's a 1, 2. This is a 3. If the market is going to retain any bullishness, it becomes very simple. We have to, if the market is going to retain any bullishness, if this is really going to be a bullish reversal, you have to bounce here right now. If the market is going to be bullish in the more intermediate term phase, you're looking at the bounce lower levels. Will be next Monday. Get that bounce now. You may not get that bounce now. You only want to go on confirmation anyway. Actually relates very strongly with momentum, with the risk, because of course a bounce here would mean it's seeing ahead, and the stop is just at 55 cents, and you're buying something like even 60 cents or 62 cents. The market high would be okay.